Mercado Libre stock is having a heck of a run. It's up almost 58% so far in 2023 as of this recording. And a lot of investors are trying to figure out, is this a buy or is this a sell? I'm Jason Hall. This is The Smattering. I've got Jeff Santoro here with me, and we're going to talk about Mercado Libre and two reasons we think it is an absolute buy. We're also going to give one reason investors may want to have a little bit of caution before they do. Hey, Jeff, how's it going?
Hey, I'm glad we're here talking about Mercado Libre, one of my favorite companies.
Yeah, me too. This is one of my largest holdings. I know it's a company that you love, that you have some exposure to as well. Jeff, before we talk about Mercado Libre, just want to remind everybody that the Motley Fool sponsors our videos. And if you're looking for even more great stock ideas than the one we're going to talk about right now, go to our special link, fool.com/the smattering. And the Motley Fool is going to give you its 10 best stocks to buy right now. Be sure to check out that link. You see it on the screen after this video. All right, Jeff. So again, Mercado Libre stock, it's up 58% so far this year. I'm going to bring it up on the screen because that sounds great, right? You know, if you've owned this stock, it sounds fantastic. But the thing is, it's actually still down too. It's down 33% from its peak, which was back in late 2020, early 2021. So there's an argument if you're just anchoring on the stock price, hey, the stock's already run up a ton, or hey, it's way down, that might lead people down the path of buying or selling without really thinking about the business. Let's talk about our first reason why we think Mercado Libre is an absolute buy.
So, Mercado Libre has a lot of different parts to the business, but the two main drivers are its e-commerce business, which is called the Mercado Libre Marketplace, and its fintech platform, which is called Mercado Pago. And I'm going to focus first on the e-commerce business because I think they're both exciting, but I think we're seeing some growth drivers there that are kind of hitting on all cylinders. So, ignoring all the top line numbers like revenue growth and net income margin and those kinds of things, if we just look at the e-commerce business, there's some numbers from the last quarter that I think are worth pointing out. So, first of all, e-commerce revenue, that was up 38%. Unique active users was up 30%. Gross merchandise volume was up 23%. Items sold and items shipped were up 18 and 21% respectively. So, just by those metrics alone, you see that the e-commerce business is really growing really strong. I mean, this isn't a small business and it's putting up double-digit growth in all those different categories. What I think is even more interesting is Mexico is a market that they've always been in, but it's been growing as a percentage of total revenue for the last several quarters now. So just to put some numbers around it, a year ago in June of 2022, in that Q2, Mexico represented 16% of Mercado Libre's overall revenue. And this past quarter, it was 21%. So that's not entirely driven by the e-commerce side of the house. That's also driven by the fintech platform, which you're going to talk about. But I think the e-commerce leadership combined with growing in a really important market like Mexico says to me that, putting the valuation aside for a moment, I think we're still kind of early for what this business could be when it comes to e-commerce in that part of the world.
Yeah, I absolutely agree. Another part of the business that you mentioned, and this is the second thing, is Mercado Pago. Jeff, I'm going to share this. This is from their second quarter earnings presentation, and again talks about a lot of those results that you talked about. Again, mentions Mexico standing out, gross merchandise volume, all of those things on the e-commerce side. But total payment volume for Mercado Pago surpassed $42 billion in the quarter, almost doubled, adjusting for local currency exchange, almost doubled. That is wonderful growth for that business. And it's something they're also leveraging with that fintech part of the business is they have credit that they do. And I think that's a really attractive ecosystem to build that out. Again, you have to remember Latin America largely is still cash. And Mercado Libre had to build a digital payment platform simply to allow a lot of people to be able to use their online e-commerce platform. And they've worked with a lot of local merchants and retailers for people to bring in cash to put it on their Mercado Pago accounts to be able to use. And they've also opened it up for people to be able to use for so many other things. And now they do more revenue through Mercado Pago than all of the e-commerce business that they do combined. It's become so important for so many people. And I think the network effects, the stickiness of a product when it becomes how people pay for their cell phone bills, other services that they use to in addition to the e-commerce purchases that they make, is incredibly powerful. So being a first mover in e-commerce in Latin America, tie that with that market leading e-commerce platform, and this is just a wonderful, wonderful combination of things. Jeff, let's talk briefly about the one thing we see that should give investors pause. Maybe caution might be a little bit strong of a word, but investors should certainly be cautious and maybe be thoughtful about building out a Mercado Libre position. And that's thinking about valuation, right?
Yeah, this is a volatile stock. This stock moves around a lot. It's a growthy stock. It's a big name, so I think valuation is always something that investors should consider. I know you'll dive into the history a little bit, but just to kick off the conversation, using price to sales as a metric, which I know isn't perfect, but just to give an idea, over the last 10 years, that's averaged 11. Price to sales of 11. And right now the stock's trading at 5.6. So not the cheapest it's ever been. The low from the last 10 years was 3.6, but not too much higher above it. And I think 10 years is a decent look back to see where it's been historically. But I think as you're going to point out, that doesn't mean you should dive right in, because this is the kind of stock that tends to give us better opportunities if you wait long enough.
Yeah, it does. And I'm going to highlight that last thing that you said at the end here, but I want to show this you see on the screen here. You can see again that exactly what Jeff was talking about. Historical price to sales over the past decade has been much higher than where it is. And that's going to make it seem like, hey, this is a really, really, really cheap price for the stock. But I'm going to overlay a couple of important metrics. So we'll start with gross margin, and that's been coming down because the company's taken on with its e-commerce business a lot of fulfillment and a lot of the warehousing and a lot of those things. It just doesn't get the same kind of margins. It's come back up the past few years, which is good. But then you move beyond gross margin, you start looking at net margin, and you start looking at operating margin. Again, they're moving back up, but they're still well below their historical levels and probably permanently lower than we may have seen some of those metrics in the past. I do think they'll continue to trend higher, but again, because this is a little bit more of a physical asset based business on the e-commerce side, and it's grown that part of its business, and you factor in the slowing growth rates, you have to be cognizant of comparing this 5.6 times to the 9 times and 10 times sales from the past. Maybe isn't the best thing to do. It might be a false value play. But here's the thing, like Jeff said, you just be patient with this stock. This is the past 10 years. And you see this line right here. Over the past 10 years, Mercado Libre stock has fallen 25% from its prior all-time high 11 times. A little more than once a year on average, Jeff. So what that tells me is the patient investors, even though we are still down from the all-time high, even though on paper it might look like it's super cheap, investors should be cautious and careful about building out their position. And I really do think this is a stock that over time, the market is going to give you even better opportunities to buy shares.